Bro.
Hi, welcome to my channel. In today's video, we'll be looking at how to understand market structure in the markets. So I'll try my best to make this video as short as possible and as informative as possible on how to understand market structure. So the first thing you have to look at when understanding market structure is that the market moves in waves, does not move in straight lines. So for instance, the market moves like that. Let's get this down. So if there are three types of phases that you need to understand that happen in the market. There's an uptrend. For instance, this is an uptrend right here. This movement from here to here is an uptrend. There's a downtrend, and there's the market moves in a range, a sideways movement, like this structure right here. It's a mini small range, but yeah. Okay, so let me get rid of all the drawings. So in an uptrend, the market moves up, creating higher highs and higher lows. If the market breaks the previous low, then the market will change the direction and it will start moving in a downwards or trending downwards. So as you can see, this is the market moved upwards, creating higher highs and higher lows. It reached up to a certain point and came down to this point, but it didn't break. It didn't break below this previous higher low. It went back up, and as it went back up, it formed a lower high right here, broke, retested, and that means the market changed direction. So this is the same with vice versa. If a market is moving from in a downtrend, moves to that certain point, comes down to this point, it breaks this, retests, then the market is going up in an uptrend. All right, so it's as simple as that, guys. If you understand how the market moves, then it's going to be easy for you to spot these moves in the market, and it's going to be easy for you to make trades and to plan your trades and how to enter trades. So in a sideways market, the market moves like that, creating a range. So now let's look at some examples, some real live examples in the market. Just remove all the drawings. So as we can see, we are on as we can see, we are on odd USD. We are on odd USD. Okay. And we're going to focus on this structure here. So as you can see, the market moved up. The market from here. So as we can see here, from this point in time, the market was moving in an uptrend. It broke this high, so it moved up, broke this high, came back, creating a higher low, went up. It didn't break this high. It's just what happens in the market. If you understand the market movement, then it's going to be easy. But the market is, just because it did not break doesn't mean that the market is going to go all the way down, because for it to go all the way down, it has to break this this previous low right here. So the market moved up, it didn't break, came down, retested on the same level and went up and created a new higher low, moved up, broke this higher high right here, came down, created a higher low. And the market does not move in a perfect transition. It always comes down, but as long as it doesn't break the previous low, it's this low here, that means we're still in an uptrend. So the market moved to the upside, reached at a resistant point in time, came down. As you can see, this previous low was broken. As you can see, these are higher highs. It broke this previous high, created a lower low here, and retested. And in some cases, this could have been an entry right here. Good 1 to 3 risk reward trade right here. So the market broke, came, retested, came down, still creating higher lows, as the previous highs are not broken. Okay. So this was the previous most high, broken. The market came back up. Okay. Broke the structure, came back to retest it, and again this would have been another simple trade. As you can see, came back to retest this previous high, came down here and went up, created a range right here, broke out of that range, started creating higher highs. Yes guys, I hope you've understood. These are only like the basics of market structure, but I hope you get the concept of how the market moves and how you have to look out for structures, and the most valid structures are on a higher time frame. So if you're trading, make sure you look at the higher time frames before you go to the lower time frames. If you like this video, please hit the thumbs up button, the like button, and subscribe for more content. And thank you guys. I'll be uploading more videos on how to understand price action. Thank you guys. I'll see you in the next one.